And we're back. Maybe you missed us. Most likely you didn't. But we're back with another edition of the Traders Circle podcast. I'm here with Michael Cornebs. Mike.
How you going, Sam?
Going well. Thank you. And look, it's another edition, another extremely bullish market. It has been the case for 16 months now. I think October 2023, I would say, is when it all began, and it's still going strong.
Yep. As we sit here today, in the past 12 months, the market's up about 11%. Most of that happened in the previous 6 months ago. I think somewhat a little bit sideways at the moment. Most of the increase came from our banking sector. Commonwealth Bank, Westpac, the first two big ones, about 20-30% returns, and then you got the other two banks, ANZ, NAB.
Yep.
So, and the big laggard was the energy sector.
Yep. Pretty poor performance from those big energy names, and I think that coincides with pretty lackluster oil and gas prices.
Yeah. So in terms of our market capitalisation, the whole market's capitalised at the moment at about $2.7 trillion. So the market's gone up $270 billion in the last 12 months, and of that $270 billion, $200 billion is come from the banks. So will it continue, Sam?
Well, that's a very good question. They're already the most expensive banks on earth. Pretty much every other developed country, banks trade at sort of similar earnings multiples to the sort of deep value stocks, talking 10 to 15 times earnings, and high dividend yields. And that's just not the case here at the moment.
Is it a question of just where does the liquidity go?
Well, I think so. Our market doesn't have as many investable sectors, as many big companies to absorb that liquidity. There's obviously still a lot of short selling on the miners, a lot of naysayers, a lot of non-believers in the miners, and they trade overseas as well. They trade a lot in the Northern Hemisphere as well. That keeps them a bit suppressed. And you're right, there is only one place that liquidity can go. There's only one part of the market big enough to absorb that liquidity.
And of course, the banks offer that lovely high yield, which all our savers like to get.
Yeah, well, I'll just say that the dividend yield is below the cost of capital for some of these banks now. I mean, CBA historical dividend yield at 2.8% relative to the current share price, a lot less than government bonds even. So, you can get into the numbers for a very long time, but they all suggest it's fully priced.
Well, and then you get into the credit market, and as quite a few experts have coming out to tell us that the bank margins, the margins they pay above the government rates is at pretty much all-time tights. You can't get much narrower. The spreads for some of the bonds have come in from 2.5-3% spread to governments, back down to 1.5%. So it's priced. A lot of the market's priced to perfection, and that includes the credit market.
Yep, absolutely. And I think you touched on it earlier, and you said that it's liquidity, and you could say it's a bubble, but when you have a bubble, you need the detergent, but you need the liquid as well.
And the other thing that's going to break this bubble is probably unknown.
Yeah, unknown, or a change in the liquidity. And I think we wanted to touch on that. For me, this liquidity is coming from US government spending, aka US government borrowing, and essentially money printing.
Correct.
The US government deficit is at about 7% of GDP now, and that is unbelievable. It's an unbelievably large number.
So they're running about a $2 trillion deficit. $1 trillion of that is defence spending, and the other trillion probably attributed mainly to social welfare programs.
Yep, absolutely. And, when you say $2 trillion deficit, just to put that into context, that's essentially the size of the Australian economy that they're spending on top of, the receipts they have. So essentially printing an Australia every year, if you will.
Correct. And so there's talk of the programs Trump's putting in place with the Doge program, Elon Musk. Musk's target is trying to save $1 trillion, but even if he gets there, it's still going to have $1 trillion deficit, and it was only about $600 billion under Obama. So there's still a $1 trillion deficit, and the question is, can he reach that level? And I think, as you point out, Sam, the way you need to think about deficits is if the government's spending $2 trillion more than it taxes, more than it takes away from the people, it's putting $2 trillion extra into the economy. You take out $1 trillion, and what happens? You could have a liquidity crisis.
Yeah, absolutely. I think, in terms of threats to this bubble, there is a potential threat there if they are able to cut government spending. Now, I firmly believe they're not going to cut anywhere near $1 trillion. I think a lot of US government spending is so entrenched that it'll be, if not impossible, suicidal to cut, basically. And, the stuff that they are cutting is pretty chump change compared to the big three, as you pointed out.
And in terms of American politics, and certainly we're not going to make much comment on the politics. Everybody's got an opinion, and we know most people have an opinion, is that Trump's governing by executive order at the moment, and, he's created plenty of excitement between his tariffs and border wall, all interesting stuff. But at the end of the day, he hasn't got Congress on side, and I think he's got a good chunk of the Republican, and this is only in political terms. He's got a good chunk of the Republican Party against him, and of course he's got the Democrats against him. And to get anything meaningful through Congress, he'll have to start getting some wins apart from executive orders.
Yep, absolutely. And, like you say, there's only so much he can do. But some of the stuff that he can do, obviously, has been implementing tariffs and trade protectionism. I'm not really a believer in that style of economics, to be honest, either. I think the science, quote unquote, of tariffs is pretty well settled. And it's, yes, a reduction in exports for the tariffed country, but there are strong negative effects for the import country who places the tariffs as well.
It goes against nearly 100 years of economics. Back in the 1930s, we went to protectionism because of similar geopolitical crises happening at the time. Many decades ago, they decided that free trade was the best way to go. Look what's happened. China being obviously the most biggest economic miracle since the 70s and 80s. But now America's noticing that the China or the BRICS countries or the Southern Hemisphere, as opposed to the Western Hemisphere, are making a fairly strong pitch to gain a bit of independence from the US dollar. You've got Trump threatening that if the BRICS countries introduce their own currency, he'll start putting tariffs on them as well and doing sanctions. So Trump and America realises that China is a global threat. You've got America as a hegemony, and the Chinese want to go multipolar, where the control of strength is shared between the world. So I think if there becomes an alternative ever to the US hegemony, the threat, the problem will be that the US privilege of being able to print money without abandon will disappear, and I think that keeps a lot of people up at night.
Absolutely, and as it should, because the pile of printed paper is not exactly small; it's growing, and even if they do remain, the global economic hegemony, then there's still a risk that debt starts spiraling out of control. Yeah. The interest on that debt,
$1 trillion,
is extremely high already. And if they aren't able to start cutting some of that spending, it does risk spiraling out of control regardless. I think that's still a way off, but it's not being managed well. Let's just say that US government spending has not been managed well for a long time.
I think it's the beginning of the end. That end might take another 10 years, but unfortunately, once America, forgetting the reasons at the time, once America took away the Russian US treasuries as a sanction, it told the world that America can make a choice about overseas investors, about just cancelling them out. if America so desires. Now, that makes no point about whether it's right or wrong what Russia's doing, but it does mean that if you have a large disagreement with America, they'll take your US treasuries off you. I think China's got about 800 billion still of US treasuries. They did have in the past, I recall, 3 trillion, but I think they've been diversifying away. And the obvious beneficiary of this sort of scare tactic is the gold price has gone up
absolutely
$1,000.
Yeah, obviously gold's benefited from the liquidity we discussed, but it's also benefited from the geopolitical uncertainty, as you say. If you are a large central bank, perhaps not part of the developed world, suddenly US government treasuries look a lot less attractive, and what are you going to replace them with?
Exactly right. And I think the point that we feel on the desk here is that I think the Trump news headlines coming out all the time, they're very interesting, saving money, getting rid of social welfare scams, whatever. It's all interesting news, but at the end of the day, I think threatening 20% tariffs, 10% tariffs, taking Greenland, taking Alaska, they have renamed the Gulf of Mexico to the Gulf of America, and he's gloating on it. I think as all of that, I think is interesting. I think creates volatility.
Oh, absolutely. And the market is prone to shocks. It is so expensive. Not just here, obviously, the US market is very, very expensive. And when, valuations are, 110% of maximum, there is risk. And as long as the liquidity is kept up, that risk is probably likely to be shorter dated, but it doesn't mean it won't be a large move.
I think at our market at the moment, the volatility has been going steadily sideways, so there's been no increase in risk. We've talked about pricing perfection on price earnings ratio on shares, on credit margins, on debt. So things are priced to perfection. So in essence, the only thing that can happen is something can go wrong.
Yeah.
That's a problem. Maybe you should touch on the announcements of the 25% iron ore tariffs.
Yeah. So steel produced outside of the US and aluminium. It was announced over the weekend that Trump would do a 25% tariff on those. I'm not sure if he's brought them in just yet, or I think he's just announced them at the time of recording. And that, has a bit of a uncertain effect. We did see the miners down today, particularly those who produce aluminium, like Rio Tinto was the worst performer of the major miners. And I think no surprise there due to the aluminium. We saw BlueScope Steel rise because they produce a lot of steel in the US.
That's right.
So the domestic manufacturer of US steel might benefit from these tariffs.
What about South 32?
South 32, a bit of aluminium as well. To be honest, I'm not too sure how they went today.
They haven't got any manufacturing in the US.
No. So, I imagine, they were lower today. Most of the material space was outside of something like BlueScope, which is seen as a beneficiary of those tariffs.
Yeah, that's right.
I'm not really convinced they will be, because they do sell a lot of steel outside the US as well. Yeah. And I think the margins on steel sold outside the US are about to get crunched. We're going to see steel that was destined for the US get dumped elsewhere, and any additional margin I think they'll make in the US will be lost elsewhere. And
I think from what I'm reading, that China only exports about 5% of their steel to the US. They export 95% of their steel to the rest of the world, and that means our iron ore has got a home to go to. Mm-hmm. So I think that's good.
Yeah, absolutely. There was also a huge iron ore discovery over the weekend as well, but it doesn't seem to have had much of an effect on price. I think the reality is that those large Australian iron ore miners, their cost of production is so low compared to all the other parts of the world that even as the price does sort of fluctuate lower or higher or whatever, I think they don't mind if it goes lower, and potentially knock off some of the higher cost producers in other parts of the world, because they can literally, ship mountains of the stuff for very, very cheap. Yep. I've always found it surprising just, how low priced our miners always are.
And I think in America with Trump, they're shifting away from the environmental rules. I mean, the Democrats had a position of pretty much not developing mines, and trying to go to renewables. I think there's a growing consensus. I've got to be careful having an opinion on that. I think there's a growing consensus that depending on renewables creates an unstable grid, and people saying that, well, really, until you can get to more sustainable baseload power, and baseload power is predominantly hydro or nuclear. Even this talk in Australia with that nuclear might be an option with the Liberals.
I don't think they'll ever even attempt it. But yeah, it's definitely talk there.
But I think that America is going a lot more to nuclear. France never pulled back from nuclear. Yep. Japan has reopened their nuclear after the tsunami back in 2013. And I think even Germany feeling the cold and starting to think about nuclear again. So, but that's base load. Renewables, you put renewables into the system, and when the sun don't shine and the wind don't blow, you have to fall back to a reliable base load. Australia is very much against gas, which is probably one of the cleanest fossil fuels. So I'm always surprised that they want to get rid of gas. I understand they want to get rid of brown coal. So I do think we're going to have an energy problem in the future. I think we're going to see increasing prices in Australia on electricity. Our inflation numbers have been quite tame, haven't they?
They certainly have.
And I think assisted by the subsidies on the energy.
Yeah, on the energy. And also goods prices have been pretty stagnant, so imported clothing and electronics and furniture and stuff has all been pretty underwhelming.
But if the discounts come off the discounts come off the electricity, that'll make a few points difference on the CPI.
It certainly will, yeah, it certainly will. That puts us probably back towards the top of the target range, maybe just above it. And, I think the big worry for the RBA will be the services price inflation.
Yeah.
And, that really, it's come down a bit, but still extremely high for things like insurance.
Correct.
Healthcare, education, still running all pretty strongly.
I think the wages number is still growing about 4.5%.
The wages number is still strong as well. But particularly the inflation number and other financial services. But the insurance number and other financial services is still way too elevated.
So you think the RBA will probably go for an interest rate cut? Because there's plenty of political pressure too. Probably got an election coming up fairly soon.
Yeah, I imagine late April, early May. Sometime around then. But we'll see. I think a lot of it will come down to whether we do get the interest rate cut next week.
So I do notice the futures market pricing in probably an 80-90% probability of an interest rate cut. That'll take a lot of pressure, I think, off Labor coming into the election, saying things might get better. I think early indications of the auction clearance rates have picked up a little bit in Sydney. Melbourne may have stabilised a bit more, but we need that interest rate cut, I think, to give the consumers a bit more confidence. Yeah,
absolutely. And, I think we've seen it around the world. There's been changeovers in governments for the past 12 months pretty consistently. People are fed up with the inflation, they're fed up with high interest rates, and they're blaming whoever's running the show at that time.
Yeah, about a half a dozen countries in the EU have gone right leaning in their elections, sick of the DEI, diversity policies, and are looking for traditional type of policies.
Yeah, I would say they're more sick of the price increases, and I think also people are aware that they're going backwards. They're compared to the 1% or the 0.1%, the average person's dropping further and further behind, and they're looking for answers and explanations for that.
As we all struggle, it was interesting to see Melbourne set a home price record. I remember this a property in Toorak was sold for $4 million in 2002 to Paul Little, ex-Toll Holdings, and $4 million turned into $150 million. sold last week, and the great thing about tax policy is he doesn't have to pay tax on it because it's owner occupied.
Owner occupied,
but that's the 1%, and the rest of us are struggling with rental increases. But I do think the CPI number in the rent has come off a touch. So
it has.
Not such a bad thing.
No, absolutely. And property prices are, at least in Sydney and Melbourne, probably slightly lower for the past 6 months.
Yeah.
We do have another big inflation reading coming up, which is the US inflation at the end of this week. It'll be seen as, basically the time allowing for the timing of the next rate cut. I think they're expecting a slight tick up in inflation in January in the US from 0.2 to 0.3%.
Yep.
And that puts it probably back above the target range, or back, or already, a little bit above the target range. And I think that could give reason for further pause from the Fed. But already the market's expected only a couple of rate cuts this year as opposed to consistent cuts. Yep. I think the big risk there is whether these tariffs and all the other things that are going on potentially do lead to further price increases. It's hard to say.
Yeah. It's hard to read the policy because Trump came out with tariffs for Canada, Mexico and China, and then 2 days later he had an excuse to get rid of it because they put 10,000 troops on the border and increased their drug programs. But I think the market was going, well, hang on, you put on a tariff, you take off a tariff, so next time you put on a tariff, do we believe you?
Yeah, absolutely.
How do you trade it?
It's the boy who cried tariff.
Exactly right.
And the when he does place a tariff, no one's gonna react.
Correct.
And there was a pretty like we said, pretty subdued reaction to the steel and aluminium tariffs today.
And here we are, Australia, one of Australia's best friends. We're gonna one of US's best friends, theoretically, and here we are. We're going to get punished like everybody else.
Yeah, absolutely. It's a good payoff for being a friend of the
exactly.
US.
Just touching on the other sector that did well for the last 12 months was the consumer discretionary sector. I saw JB Hi-Fi was up 70% over the year, and Aristocrat Leisure and Wesfarmers, Harvey Norman a bit way behind at 15%. How are you seeing the discretionaries, you think?
Personally, I think they were, especially in JB Hi-Fi's case, too underpriced 2 years ago. Yep. You're looking at 2 years ago, it's trading 10, 12 times earnings, 5-6% dividend yield, $40. You had earnings growth, and all the analysts were saying, business will decline from here. We'll see inventory write-downs, and they'd written it off. And the consumers have been resilient. We've seen spending, we've seen inventory turnover, we've seen price increases, and as a result, it's rocketed from that.
And you have to make the comment is with all the thought that as an individual we think we're doing it tough. The economy it does appear to be robust given these discretionary numbers coming through. People are spending money.
Yep.
I did an update on I checked the government taxation receipts and expenditure, and receipts are growing consistently about 4.5%, year on year, month over month, 4.5% increases. So there's no downturn in taxation revenue. So that means we've got a healthy full employment. The consumer has got money in his pocket to spend. We haven't seen the ramification of what we think is higher interest rates. We're going to do it tough.
Yeah, no, absolutely. And credit growth's been reasonably strong, yet property market turnover hasn't been strong. So that credit's going somewhere. Yeah. Maybe consumers are taking on credit to purchase things as well.
Yeah.
But in terms of looking forward on our market, I think we've reached a high level. We might go a little bit higher. I think it's going to be hard for us to see much more price appreciation from here. We've priced in good growth. We've priced in a lot of positivity. But the reality is our market will earn less this year than 2 years ago. Correct. It'll pay less dividends this year than 2 years ago. We're 20% higher in price. I don't feel we can go that much further.
And I think too, we have a really massively growing private credit sector.
Mm-hmm.
That means not as much credit creations created by the banks. There's so many new credit funds being set up, chasing money and placing quite well IPO into the market, hundreds of $1 million placement. And the thing with the private credit market is there's lack of visibility on those assets, and there's no liquidity in those assets. So again, price to perfection, and we haven't got visibility on a growing part of the credit market. So that when things can go wrong, a lot of things are going to go wrong.
Oh, absolutely. I mean, if there is a credit crisis, there's a lot of value to be lost. And
that's right.
If you've seen the movie The Big Short, for example, I think a good parallel between not knowing too much of what's in some of these loans or what's in some of these lending funds, what the asset quality is like. So.
Exactly right. Where would you be then for the next 3-6 months? Where's your defensive?
It's a good question. I still think there's a lot of value in the materials space. Obviously, you're going to have to ride out a lot of volatility, just short-term movements in prices, things like the tariffs that we discussed. Outside of that, I struggle to pinpoint an attractively priced part of the market. I think utilities are fairly priced. Healthcare is fairly priced. So those could be places to look. If you look at CSL, we're going to start seeing some of the growth of their Vifor acquisition start to be really earnings accretive, and yet it's not too expensive compared to history. But outside of maybe healthcare, the miners, maybe utilities.
How much do you think the environmental concerns? Remember tobacco became a no investable criteria for the fund managers. Did the miners suffer from that?
I think they have to some degree, but I think more so they've suffered from two factors, and that is short selling from the Asian region. There's a lot of Chinese hedge funds and investment managers short selling these miners as a proxy on the Chinese housing market or the Chinese economy or things like that. And then also the fact that they do, BHP, not so much anymore, but Rio Tinto, and they do have that dual listing structure. They do get traded a lot in the UK. They do get traded a lot in the US.
Yep.
And those stocks trade at lower multiples over there. If CBA was dual listed between the FTSE and the ASX, it would probably be an $80 stock. And that's not an exaggeration. Banks over there trade at much, much lower earnings multiples. Rio Tinto itself trades at a lower earnings multiple in the UK than it does here. And those sort of things, I think, have worked to keep the prices more reasonable. But outside of maybe, some of the healthcare names, some of the mining names, I'd struggle to pinpoint anything that's too attractive in this market.
And you wouldn't get into Bitcoin?
Maybe on the next sort of big downturn. I think there is unless they sort of change the encryption processes, I don't think that's possible. There is, I think, a timeline. There is a time limit on Bitcoin. There's an expiry date, and there is a chance that computing becomes strong enough to crack the encryptions on current cryptocurrencies. I know it sounds like a sort of unlikely doomsday scenario, doomsday forecast, but it's not that unlikely at all. Not with the pace of computing growth.
You've got a stock like Archer Materials developing, quantum computing, and not having an update on where they're at with that. But if they did get a usable quantum computer, and that computer could work so fast, the mining of Bitcoin could be done at a fraction of the cost it's currently doing now. Mm-hmm. And the thing of Bitcoin is that because the block is so hard to solve, every 10-minute block so hard to solve, you need a bucket load of power. But if a quantum computer comes along, it can do it easily. It will certainly put a question mark over, is your Bitcoin? I better not say it.
Yeah. So I think I think that does put a bit of a expiry date on current cryptocurrencies. And, look, it might be 10 years, it might be longer, we might see a breakthrough in the next year or two.
And you've got the US, you've got the Trump administration being very bullish on crypto, talking about Bitcoin, talking about stablecoin.
Yeah, I was just going to say it's ridiculous that we've got a president who ran a crypto scam, rug pulled his supporters in a crypto scam. I mean,
are you disappointed you didn't get in?
I'm not disappointed. I just think it's they've got some sort of comedy movie writer writing the plot to reality at the moment. Yeah. It's absolutely ridiculous.
So just on a local note with the AI, we had our first sale on our products coming from ChatGPT, where and it really is, I think, is very significant for us because as a business, as many businesses, 20 years ago when we first started, we were marketing via print media,
newspapers.
Newspapers, if you remember those things from the past. Either Fin Review, The Age, and the MX magazine on the train, and then slowly but surely this thing called Google came along, and 95% of advertising is now through Google, and I think when we got that sale from the ChatGPT lead, it sort of said to us that, people, I am reading that Google's losing a little bit of their search coverage. And so people want to ask Google a question and I'll say, where is the JB Hi-Fi store? And I'll get, every other store ahead in the search. So Google's not answering my question. It's selling the highest bid advertising. And that's what it is. And we go out there and you bid on words, blah, blah, blah. So then ChatGPT comes along and it becomes something where you ask a question and it gives you an answer.
Yep, absolutely.
And that is an alternative to search, but you've got to monetize.
Yeah. And
they're struggling to monetize, especially when ChatGPT, the premium monthly fee was $200 and DeepSeek comes out and says you can have it for free. I don't quite know whether the money, how you monetize the AI, given the fact that everybody's leapfrogging each other with technology. But the point it sort of said to us is, well, that's interesting, isn't it? And the question the client asked ChatGPT is, who is the best option education trader in Australia? And ChatGPT came back and said, the ASX, highly reputable. Number 2, Trader Circle, been around so long, highly respected. And we're going, okay, so there's a way that AI, everybody who's spending their money on Google can think of another way to go towards AI and try and get up the rankings of how ChatGPT may describe you.
Yeah, absolutely. And, I think as they expand their training data, that will be a big consideration, getting your commercial brands and things like that into that training data. They will monetize it, no doubt. But I think it's sort of going to be first a bit of a Game of Thrones to take the throne, and then once you've got the throne is when you try and monetize it.
It will quickly evolve. A client today asked for whether there's an ETF to trade AI, and there is one big ETF traded in the US and traded in Australia. It's an ex-global, you need to look it up, it's an ex-global AI. Do a Google search on that, don't do a ChatGPT. So there is an ETF you could buy to trade AI, and I have noticed it's gone up about 25% over the last 6 months, so it may be a tradable asset.
Yep, absolutely. Should we wrap it up there?
I think we should.
Yeah. If you guys are still watching, thanks for the interest. We certainly appreciate it. We do this for you guys. We hope people watch and enjoy and click the like and subscribe button.
We try to enjoy ourselves.
We do, yes.
We don't take ourselves too seriously.
No, we don't. No.
The main thing is just to try and get some fun out of this business.
Yeah, absolutely.
Make some good decisions in trading, I think.
Beautiful. So thanks once again, guys, and we'll see you guys next time.
Take care.